Hi folks, David Waring here again with InformedTrades.com and today's lesson of the day. In our last lesson we wrapped up our discussion on trading journals with a look at what many successful traders look for when reviewing their past trades. In today's lesson we're going to look at how many traders run their trading like a business and look at some of the different components which traders include in their trading business plan. So let's get started.
One of the leading causes of failure of many businesses is their lack of planning. I think most successful people will agree that if you want to be successful in life and in business, you need to have a plan for how you're going to obtain that success, set goals to meet along the way, and then work towards executing your plan and meeting your goals. Trading is no different from any other business in this sense, and it is my opinion that those who fail to plan out their trading like a business are doomed to failure as well. With this in mind, it's important to have a written business plan for your trading, just as you would for any other business. In this lesson, we're going to look at some of the things which I feel should be included in that plan, most if not all of which you should now have a good understanding of if you've watched our lessons up to this point. The first thing that you want to make sure that's included in your business plan is why you want to get into trading. You want to be specific here so that you can make sure that it's clearly defined to yourself exactly why you're doing it. Is it for the money, these types of freedom, those types of things. The second thing which kind of feeds off the first question is what do you hope to gain from trading? A lot of people say money right off the bat here, but I can tell you that many successful traders that I've spoken to anyway are not actually in it for the money, even though they've been very successful at that, but for the intellectual challenge and things such as that. So there are other things to trading besides just the monetary component, and if you're only in it for the money, that's not to say that's a bad thing, but that just needs to be clearly defined in your business plan. The third thing that you need to make sure that it's clearly defined is what is going to separate you from all of the other traders, or the large majority of traders that fail when trying to trade. Okay, and another way of saying this would be what is your edge or edges in the market that is going to separate you from the pack and allow you to be successful where so many others have failed. Number 4 here is what are your biggest weaknesses, and this is something that everybody needs to think hard about. It's something that's difficult to address about yourself. Everybody likes to think that they're perfect, but we're obviously all human, so nobody's perfect, and there's plenty of weaknesses that each of us can list out, I'm sure, about our trading capabilities. Next is what is your plan to address those areas of weaknesses and then to leverage those areas where you're strong or where you have edges, as we've listed out in the third one there. Okay. Next is the overall time that you have to devote to trading. Do you have 2 hours a week? Do you have 2 hours a day? Can you trade for 14 hours a day? These types of things is going to be important when determining what type of structure and what type of trader you're going to be in those types of things. So the next is sort of feeding into that is what is your style of trading, or what's the style that you're going to use? Are you going to be a day trader, or are you going to be a swing trader, or are you going to be a position trader, or a combination of the three? And does that style fit with the above time to devote to trading? Obviously, if you have an hour a day to devote to trading and you want to be a day trader, then that's probably not a realistic goal. The next thing is the markets that you will trade. Okay, so obviously, again here, if you have a lot of time to trade, but you're busy at work during the time that the stock exchanges are open and you want to day trade stocks, then that's probably not a realistic goal, and you might want to look at one of the 24-hour markets or something along those lines. But again here, so all of the different market characteristics from a trading hour standpoint and those types of things, and then also why you plan on trading those markets is important to have that listed out and not just sort of put your thumb up in the air and decide which markets you're going to trade by which way the wind blows. The next is your time management plan, and this is a little different from the time that you plan on devoting to trading. from the standpoint of this is how you're going to set up your trading day. So if you're trading throughout the day full time, then an example would be, from 6 a.m. to 9 a.m. I'm going to spend researching stocks and seeing what happened overnight and learning about the market and those types of things. And I'm going to spend the next part of the day actually trading, and then after the close I'm going to spend X amount of time reviewing my trades, these types of things. The next thing is the exact entry criteria that you're going to use, or the strategy that you're going to use to enter trades. Obviously a very important component of the business plan here. And then feeding right off of that, what is the exit criteria that you plan on using with what's your strategy here? And this just really helps further define the strategy here. And then obviously for those of you who's been following my lessons, you probably guessed what the next one was going to be. There is your money management criteria, and those three things kind of give you the structure of how you plan to trade the market. It's very important to have those very well fleshed out and written down, so you can always refer back to that and make sure you're not deviating from that, or if you are, that you're going through a structured adjustment process to do that. Next would be the strategy monitoring plan. So this basically means how are you going to know if your strategy stops performing in the manner that it's supposed to? So some things here would be like, I'm going to look at the average win to loss ratio, the average profit to average loss per trade, those types of things. And if these things get out of whack with what's expected from my strategy, then I'm going to know something's wrong there, and that I need to address it. And so feeding right off of that is the strategy for adjusting your strategy, or the criteria for adjusting your strategy if you realize from your strategy monitoring plan that something has gone wrong with the strategy. You don't want to just adjust your strategy on the fly. You want to have a structure to that so you can make sure that you're monitoring things and not sort of flying off the handle just because the strategy has stopped working momentarily. Next would be what trading software like charts and trading platforms, if you plan to use one of the paid trading platforms, and then the budget for those. Next would be what broker do you plan to use and why. And that may be brokers there as well if you plan on trading multiple markets. Next would be, will you add money to your account periodically to up your trading balance? And if so, where do you plan to get that money from? Next would be, will you reinvest your profits or will you withdraw them? Next would be, if you plan to trade full time, do you have enough money where you can open an account with enough money to become profitable in a reasonable amount of time? And can you support yourself in the meantime? And then lastly, what is the starting balance of your account going to be? Now, once you've listed all of these things out, you should have a very clear picture if you've taken the time to, think about this and really do this in detail, which is definitely worth doing. You should have a very clear picture of where there may be some holes in your plan to become a trader and how you can go about addressing those. And you should feel much more confident once you have gone through all of these things and addressed each issue, if everything lines up. For example, that you have enough money to start with, you can support yourself, and you've got enough of a budget for your trading software and everything else. With the money that you have, you obviously have a much higher chance of success than someone who does not. Okay, so that completes this lesson, and that also completes our lessons or our Trading Basics course. So I hope you've learned as much and had as much fun going through the course as I have in producing it. The next course that we're going to be putting out is going to be on the foreign exchange market, starting with our next lesson. So we hope to see you then. As always, if you have any questions or comments, please feel free to leave them in the comment section below. And good luck with your trading.